The MoneroTopia Price Report segment is sponsored by Exolix, a privacy-focused, non-custodial instant crypto exchange. Go to exolix.com to enjoy secure and completely anonymous swaps with no KYC or sign-up. Swap between Monero and 2,000 plus assets at the most competitive rates and with no limits. Exolix.com, your fast and secure way to privacy.
Jim buddy.
Hey, what's up, guys?
What's up? How's it going, man?
Great to be here. Thanks for covering. I thought that was the news, actually. I jumped in a little bit late. And I was like,
no, we just kind of went off.
That's good.
We started just talking about some of the hot topics.
Immigrations, yeah.
Well, yeah, just Elon in general, right? Like with what he's up to.
Yeah.
But yeah, we don't need to rehash the convo now. I'm sure we'll be talking about it again in the news. But yeah,
Yeah,
ultimately, is he here? You know, it's the million Monero question. Is he truly here for liberty, or is he just trying to corral
Elon
everybody?
is here for Elon. Like, that's one thing I'm certain of.
Right, and what is Elon? What drives him? Where do his
Corporate interests. That's it. He wants to secure the government.
But at no cost, or does he want does he want to flourish in a society where individuality and freedom are flourishing, or is that not a concern of his?
I think he wants to be the leader of the flourishing society. I think he envisions himself in a certain way, and I think he wants everyone else to envision him that way, and he wants to lead that society to Mars or whatever.
To Mars or whatever. You say like but it's actually happening, which is fucking nuts. It's pretty awesome.
Like, I don't see it happening. They've launched 7 starships, and they've all either blown up or melted. They have not returned. They have not put any payload into orbit, and they have not returned a vehicle that has not either exploded or been partially melted. Like, where is it? I don't see it.
Well, he's not giving up.
He's got it all. So he needs more, so he's trying to take over Mars. It's like, dude, chill out. Literally the richest single individual in the entire world. I think, right? Or second. I think he's
I love that. I love that he's trying to go to Mars. I think that's just freaking fantastic. I think that's great. Like, why not?
If he was putting space stations
jump to another
into
rock.
orbit,
We need somebody to jump to
great.
another.
Like, I'm totally like, space stations would be step one. Build a bunch of space stations, be able to put a lot of payload into orbit, show that we can do automated construction. Even on the moon, that would be fine. Like, Mars is such a, like, the difference between the moon and Mars is just so vastly complex and so much more difficult. Like, if you can't do it on the moon, then you can't do it on Mars. At least just build one automated space station that you build on the moon with AI or whatever. Like, just prove it there. It's way cheaper to do it. It's a lot easier to rescue somebody.
I don't know why. Maybe you'll see competition of somebody else trying to do that, right?
I mean, I see Blue Origin. I see Bezos actually doing some interesting stuff, and he might end up because they've been developing a moon landing vehicle as well, so they might actually beat Musk to it. Maybe not anymore because of Doge, but
I mean, you could terraform the moon, right? If you could terraform Mars, why can't you terraform the moon? Is there talk of that?
No, it's not. You can't really do either. No, I mean, probably if we had like crazy advanced.
Why can't you terraform Mars?
Well, like how? Like, you mean you want to warm it up and you want to melt the polar ice caps or something?
Yeah, yes, that's right. That's
because there's no magnetic field. It doesn't, like, even if you were able to melt all that ice and you were able to like somehow create oxygen and CO2 from the rocks, you're going to lose all of that atmosphere because there's no magnetic shield or magnetic
so you gotta
from the sun.
All right, so you got to use like nuclear power to like create your own magnetic field or something.
It's ridiculous. Yeah, exactly. The amount of money and like work just to have like sustainability up there, it's just like astronomical.
What would be the best way to create your? Oh yeah, we don't need to get into that, but I'm sure there's ways to engineer that as well.
Of course, there's ways. It's just that the energy budget is so vastly beyond anything we're capable of doing right now. Like, there's so many breakthrough technologies that absolutely must be made before we ever, like, even think about fantasizing about terraforming Mars. It's just like we're so much better off focusing on Earth at this moment than we are on, and even space stations, right? Like, space stations could be a really great stepping stone. Like, we're going to learn a shitload by building more of those.
Well, reach for Mars and you may get to the moon, right? So
All right. I guess I would say fair enough. I would that I don't agree, but you know, we should talk about the price. Maybe that's something I know about.
Yeah. Let's move on
I'm not
to
an
the
astrophysicist
price.
or whatever. Although I am an
Yes.
engineer. But so are you. So all right, yeah, let's
Sure,
talk
sure.
about price. Okay, so we got the Monero charts here pulled up. Okay, so we did get like kind of the scare a little bit, you know, the are we going down? Right now, honestly, right now in terms of the amount that things have dropped, you would just say, hey, this is a normal pullback. But you know, it's the other things that I'm seeing that are concerning, and so we'll get to all that macro stuff a little bit later on. Things didn't totally break down. We were talking last week. You know, I was like, hey, start paying attention. It's really important. We didn't hit those like big confirmation pieces yet, but that doesn't mean that they're not going to hit, right? They just didn't hit yet. And based on previous timelines, it doesn't have to hit, you know, immediately, quickly. So anyways, let's talk about Monero. Doing pretty good. We have taken a little bit of a tumble, a little bit of a whoopsie daisy, like with the rest of the market has done. But we're holding on pretty good. Nothing really terrible here with the price still hanging out above 200, which is you know, fantastic considering where we have been in the past. Right, we're up a pretty good amount. Maybe not as up as much as some of the highly heralded shitcoins that are floating around, but you know, the shitcoins are having their own problems as well. Like the altcoins in general, just they still have not been able to put on anything significant and keep it. Whereas Bitcoin is at least, you know, like still above its previous all-time high, right? So we'll talk about Bitcoin later as well. But yeah, like we've talked about, we're basically hanging out in this area right here. You know, it has been the first time that we've made it to these blue standard deviation bands, these upper standard deviation bands. That is like literally the first time we've touched them since the last bull market, right, in 2021. Or maybe I guess it was 2022 as we were, you know, kind of on the way down this little peak, this little peekaboo right there. Yeah, I mean, it's not too surprising that we're going to take some time to break through them. That poses a little bit of resistance. You know, it's pretty cool actually that we are in fact pushing the top side of those bands. Like that is a significant thing, that price is strong enough, even as things are pulling back, for Monero price to still hang out in the top of these bands. So yeah, I mean, that's pretty decent price action still. This chart does not look nearly as horrible as so many of the other altcoins are currently looking. And you know, it's funny because a lot of the altcoins, it's like they pump crazy hard, but yeah, then they dump back down because those prices were never based on anything other than both speculation and fraud to manipulate prices to the upside temporarily, so that you can generate some exit liquidity for, you know, the pre-mined shitcoins and all that, pre-mined, insta-mined, and dev text kind of coins. Let's take a look at the XMR BTC relative ratio. And this is actually instructive as well to give you an idea of how well XMR is doing. All the other shitcoins are like just suffering against Bitcoin, right? Bitcoin is still just, you know, he's being an abusive daddy, as he usually is. And Monero, however, is holding its own in this fight. Monero is the redheaded stepchild that's fighting back, and Bitcoin, not allowing Bitcoin to just you know, dump all over it. So in other words, we're hanging out here at the top of the range while everything else is kind of having a lot more consternation versus Bitcoin. And again, like we talked about, these upper standard deviations, you don't really expect to touch these and then continue smashing to the upside without spending some time consolidating, right? So if this chart wants to go higher, and I have big questions about whether it actually will go higher, at a minimum, it does need to consolidate around these blue bands. And keep in mind, this is technical analysis, right? This just tea leaves analysis that we're talking about here. There's other fundamentals. Anything can happen. Bitcoin could have a hidden inflation bug that we only discover in the next few blocks, and then perhaps, you know, its price crashes, and then, you know, Monero, everyone's like runs to the safety of Monero because Bitcoin has an inflation bug or whatever. In which case, a fundamental event could drive Monero to just smash through all of the tea leaves levels, right? Okay, just keep that in mind. There's, you know, we can't necessarily capture all fundamental events and big mass psychology changes with things like standard deviations and other statistical means or other TA technical analysis means. But, you know, they are useful, generally speaking, for like kind of steady state markets. That's really where technical analysis can shine, particularly statistics-based technical analysis like we're looking at here with what I call wave magic, which again is just a bunch of clustering of upper and lower standard deviations, and then the white here is moving averages, right? So these are all different time frames of moving averages. It's like it's like an advanced form of the moving average ribbon. I'm sure you guys might have seen that before, but it's just it's taken to its logical conclusion, and you get these very beautiful charts that kind of have like this sort of fractal appearance to them. Okay, yet I digress. Back to the actual charts here. So we're expecting some consolidation right here. I don't expect this chart just to smash to the upside all of a sudden. It's possible we could continue going higher, especially, you know, maybe if the markets are in for a lot more chop to the sideways. And hypothetically, if markets go down, all bets are off, right? That's another fundamental event. We could see Monero crash and then rebound like that, right? So you would just see a lot of volatility in this chart, very likely if we actually do get that macro crash or some other fundamental events. Okay, so but anyway, still doing pretty good. You can see relatively to Bitcoin, Monero doing quite well. We can also look at Monero relative to Ethereum, and this chart is a lot more, I don't know, happy. Let's just call it happy. This chart is actually, well, maybe over the long term not quite as good, but over the short term you can see that Monero has done, let's just say from the bottom, it's moved up about 3x versus Ethereum, right? So Monero is actually well above that breakdown point from when Binance did their little delisting thing to try and hurt Monero. I'm sure that that had nothing to do with CZ getting arrested and thrown in prison and Binance getting sued and all that. Anyways, yeah, so we're basically in the moving standard deviation cluster again, kind of like we're talking about with the Bitcoin chart, except for it's performing a little bit better. At this point, again, I still would kind of expect Monero to need to have some consolidation here at this upper standard deviation cluster before deciding what to do next. But you'll notice again, like this is, I tell you guys about these clusters. These are general zones, right? These are areas. These are not hard capping resistance levels. They tell you when you're entering a place that it's time to start thinking about, you know, maybe some fundamental events. It's maybe time to start thinking about taking profit, etc. I would never take profit on Monero, and may God have mercy on the souls of those who do. But hypothetically, if you were going to take profit on like a relative XMR versus ETH trade, this wouldn't be a bad spot to do it. Yeah, I mean, again, this is probably going to be some place where it finds, you know, some stopping point, and maybe it needs to like consolidate here for a period of time, and then it could go up farther, right? That could happen. If we get the liquidity expansion event after some sort of macro crash, you know, we'll have to reassess everything after that. But typically, you're going to expect the coins, the corporate coins, the government approved coins to get the liquidity first, and then watch that spill over into Monero after the fact. So we have kind of counter cyclical pumps, and I think everybody on the show has seen that multiple times. We all know that's the case that's happening. The other coins pump, and then Monero pumps at some point afterwards, and then coins start dropping, but Monero keeps rising, or everything is flat, and then Monero is performing, right? Like Monero gets these kind of like weird counter-cyclical movements, even counter-cyclical to the altcoins. And again, the reason is because the cabal doesn't want to pump liquidity into Monero. They want to pump it into the coins that they printed for free, obviously. You know, after that, Monero will kind of get sort of hand-me-down liquidity after the fact. So that's the mechanism there, right? That's your fundamental reasoning there for why Monero has these kind of weird counter-cyclical fits and starts from time to time. I don't think there's anything else here too much of interest to look at. We can look at the Monero dominance. This is basically the XMR BTC chart, but it looks a little bit better than that because, you know, the other 50%, maybe it's 40% now of altcoin market cap is not doing nearly as good as Bitcoin. So Monero is actually looking pretty reasonably okay. Actually, let's take a look at the longer chart and see where Monero broke down from the Binance delisting. Yeah, so wow, this actually is starting to look a lot like a W bottoming pattern, but let's see. So Monero broke down Binance listing, right? Yeah. Okay, so it still hasn't quite made it back in terms of the Monero dominance. Just know that at a fundamental level, this chart and a lot of pretty much all altcoin dominance charts tend to look this way. They're like kind of always losing. So you might call this a W bottoming pattern, but this is where you have to interpret in terms of fundamental realities of the market. And that is that they're always launching new shitcoins. There's always some new shiny fucking thing to take the attention away from the old battle hardened coins like Monero. I say coins, but it's basically just coin, just one, just Monero. Okay, so yeah, this thing, maybe it'll go higher. I don't know. I don't have any opinions on what the XMR.G chart does, but that's what it looks like. Let's go to, let's take a quick look here at privacy shitcoins. Yeah, we're getting a little bit of rebound here in Xano. Let me put on the wave magic. I promised that I would stop talking about, I promised myself and all of you, I guess, that I would stop talking about what Xano should do next. So you guys can take a look at the wave magic chart here. 1, 2, 3, and you can make your own decisions on that one. Firo doing nothing, just flat. Pirate Chain also doing nothing. I think this is the weekly. Let's go to the daily. Also, am I missing any comments? I'm on the Monero Talk XMR chat. I don't know if that's the right one or the wrong one. I always forget, and I always ask the same question. Let me go to MoneroTopia and make sure there's no comments there. Let's see. Anyone saying stuff of interest here?
Should be the Monero Talk one.
Oh, it is Monero Talk? Okay. Okay, I don't see anything on there. All right. No, I don't see anything. Just making some funny comments about WoW. Yeah, that's they shouldn't have started a fight. You shouldn't have been talking shit about Doug. You're right. If they hadn't done that, they would be fine. But now they have to deal with the consequences. Okay, yeah, Pirate Chain. Wow, Pirate Chain is breaking down. Wow, that looks terrible. That's really, really bad. We haven't seen these kinds of daily closes from Pirate Chain in since like forever. I don't know. Let's go back to the weekly and see. Yeah, weekly is about to close pretty bad. Maybe Pirate Chain is watching the show and they're gonna like try to pump the coin to make sure that it doesn't close lower. Oh, look, it just ticked even lower. Yeah, I wouldn't be in this coin, guys. This is gonna be really bad stuff if you have a lot of money in this coin, especially if the market does actually crash. Like, don't be in Pirate Chain. Darrow, we just keep Darrow on the list because it's funny to watch this happen when we kind of like knew this was going to happen. Like maybe we didn't know it was going to happen, but like, yeah, there was questions about their best practices for a long time. They have now tagged their all-time low. It's probably going even lower. Sorry, Darrow. Bye, Darrow. Zcash doing nothing, kind of flat. Yeah, okay, nothing interesting there to look at all. Monero transactions still hovering just below 30K. Okay, would like to see this go higher. Come on, somebody, pokes a stick at it, do something. Let's take a look at the mining, the hash rate. I always take a second to find this average hash rate per day. And we're still at the same, like we're still basically flat. Kind of like we had a nice move towards the upside, and then things have kind of flattened off lately. So I don't know exactly why they have flattened off, but maybe somebody Tux has stopped his purchases of Threadrippers. So Tux, if you could, I don't know, need some more gains, or if you got to work a second job, but if you could turn on a few more hash Threadrippers, I think the hash rate would really appreciate that. All right, so let's take a break before we talk about Bitcoin. We'll go to the macro. There's nothing too crazy to talk about here. Oil is kind of like, I believe oil is our alpha. I believe that oil is the thing that gives us the advanced signal that a lot of people just don't know they need to be watching. And as we talked about last week, oil finally did break down. It started breaking down into that yellow zone, right? Because we had called for the longest time, and maybe I should just leave a TA line or something here. We called this the yellow zone. We said, hey, this area is kind of like, be careful, be cautious. And then anything down here is like, watch out. Like things are about to break down. If you start closing down there, we had a couple closes kind of down there. Technically speaking, it's still like we only wicked down to the bottom that was set last year in September. But this is a terrible chart, and this thing's going to break down eventually. Again, if you start seeing if we get to where the weekly close happens down in this range, that's probably a sign that you're looking at 1 to 3 weeks before macro crash, right? It could literally be, it could be soon, trademark, or it could still be a few weeks away. But once you start closing into this area consistently, that's when you really need to start watching out. And you want to sort of corroborate that with bonds as well. So let's take a look at the bonds really quick. This is all of the bonds overlaid. So on the left here, I'll just open this up. You can see this is 3 month, 6 month, 1, 2, 5, 10, 20, 30 year. And then the white is obviously the overnight federal funds rate from Jay Powell and his crew of economy saving, economists. So yeah, we haven't really seen, like, the bonds are starting to move down, but we're not seeing the kinds of like crazy downward volatility, right? We're not seeing the flashy red signs that things are incipiently crashing. But let's go back here to when the economy caught a cold in 2020, as we say. I think we're allowed to actually say the C word now. But we'll still avoid it just in case the algorithm, doesn't like it. Maybe it'll actually get you promoted now, because obviously, because there's Doge, and they probably convinced Google to remove the filters or whatever. Okay, anyways, let's take a look at the timelines here. So the week of the major crash was right here. So you can look at the bottom. That's 302, right? So I'm drawing this little like yellow line right there. Right, that's the week of March 2nd, 2020. That's when the crash really, really happened. So you'll notice that the week before is when you actually started seeing that kind of down drop. So if you see bonds starting to take a downturn kind of like this in a similar fashion, that's that. And again, combined with oil closing lower and just in general, just like the spidey tingly of fears, and it probably doesn't require any great insight to be able to tell that, because you'll just see everyone being like, oh my God, we're going to die. Everyone's going to lose all their money. And we all like money. I like money. To quote Idiocracy. Yeah, so if you see things starting to turn down like that and you corroborate it with the other signals, that could mean that, hey, we are actually looking at the 0 to 2 week, 0 to 1 week timeline before real like hardcore macro crash happens. Okay, but we're not quite seeing that just yet. But again, I just want to give you perspective, some ideas on things you could be looking for on your own time if you're trying to protect yourself. So we are seeing the bonds, actually, they did turn down a little bit this week, but not crazy hard. So yeah, again, just, keeping an eye on that. If you haven't been paying attention, start paying attention, give it a midweek look. If you're going to try and protect yourself, if you don't give a fuck and you're just like, I'm just going to hodl and it doesn't matter to me, then that's totally fine. You could just hodl and just, be comfortable that the liquidity expansion will happen and your bags will go up, maybe in like 6 months or a year. Hopefully you don't actually need those bags for anything, but yeah. So, okay, here's the oil chart. We looked at that. Let's look at gold, because that's kind of a happy story. So, okay, let's actually, before we talk about gold, let's take a couple step backs. Maybe this is a bit out of order. What is a macro crash, right? Because I did have some questions I posted a little bit on Twitter. One of the things I was like kind of hoping to see this week is you get a midweek pump followed by everything closing back down at the lows. And on some like instances that happened, but it didn't happen with oil. Like it did get a midweek pump. It came back down, but it didn't really close or go down further than it did last week on the weekly. So let's just look at that. Basically closed at the same level as it did last week. So yeah, we didn't really get that confirmation point, that it became clear that the shit was going down, right? We didn't get that. But yet I digress. I want to talk about what is a macro crash. Because people, maybe people from back in the day remember a name, Harry Dent, and they remember Peter Schiff versus Harry Dent, and he's like inflation versus deflation battles, and like, what is, what's going to happen, and what is a macro crash or whatever. Okay, let's start broad level. The system as it exists now inherently and inevitably, mathematically produces long-term deflation. If you don't touch the system and you just let it run and you just let it do its thing, the entire economy is going to deflate massively. This is, incidentally, the very first major crisis that happened after the Federal Reserve was created. You had the 1929 blow off top, and then you had the Great Depression afterwards because the Federal Reserve didn't intervene. And that's kind of like the evidence there that the system ultimately produces deflation. Now, deflation happens because money has to be paid back. They created a bunch of money from nothing. All of that money was created at the point of a loan, or really thousands, tens of thousands of loans. And then if the economy crashes, those loans start getting paid back. Some of them just go bankrupt, right? But a lot of them start getting paid back and money starts getting destroyed, right? Those credits start, it's just at that time, it wasn't credits on the screen, it was credits on a piece of paper, but those credits get destroyed. And so you actually have less currency in circulation. The M2 money supply goes down, right? It retracts, it goes backwards. And that is the destruction of money. So there's just no money in the economy at that point to service the needs of people that want to do business. And so you get deflation, which means all assets are going to go down in value. You're talking stocks, gold, crypto, commodities, literally everything. That's deflationary. Now, these macro crash scares, right? So 2001, the dot-com, 2008, the housing bubble, 2020, right? These are all deflationary scares. The economy starts to reverse, and you see it very clearly. Everything drops at the same time. Gold, so we have a caveat for gold. Put that as a placeholder in your mind. But basically, everything drops at the same time because there's a deflationary scare, and everyone's smashing the sell button. And the safest place to be is hold on to the dollars that are now going to be deflating, that are going to be getting destroyed, right? That is what the system will inevitably produce if left untouched. And the Great Depression shows this. And Ben Bernanke even referenced the Great Depression in 2008. He says, we will drop money from helicopters if we have to. He was called Helicopter Ben as a result of that little I don't know, media operation or whatever. Because he's like, listen, we recognize what happened in the Great Depression. We will never let that happen again. And so everybody knows, and the Fed knows, that when there's a crisis, they are going to print their way out of it. They're always going to print their way out of it. Otherwise, the system will collapse. And so the system will not collapse unless they want it to. It's not going to collapse unless they want it to. Even Argentina, with their 300% inflation, the government still hasn't collapsed, right? Their system still hasn't collapsed. They still have pesos. It takes either a massive hyperinflationary event or a massive deflationary event. Deflation doesn't have to happen if they don't want it to. And hyperflation doesn't have to happen. It doesn't have to happen if they don't want it to. Anyway, so the point is that, yes, if there's a macro crash, they will reinflate, and then you'll get the liquidity injection and the releveraging of the economy and the pumping of all the assets, right? And so that's what we'll be looking at. And gold is like kind of this safety play that in 2008 crashed. In 2020, it crashed with the rest of the market. Right now, things are looking dicey, and gold is continuing to perform, right? Here's the weekly chart. Gold has put on new all-time highs this week. So that's a 3% gain for gold, which is pretty significant. So I, for a while I said, hey, gold's going to crash with the rest of the market. Maybe probably it still will a little bit, but it just looks like it wants to keep on going because it's probably a risk-off safety play, right? People are recognizing this. And then you've also got central banks, right? A lot of them are actually stocking gold, right? You got China and Russia is still under sanctions. So they're using some cryptocurrency now. They're probably stacking gold as well. So gold is definitely acting truly as a counter risk hedge right now, which is very interesting. So at this moment, in a technical analysis sense, you would take a look at this purple band and you say, hey, that's continuing to go up. So gold might do this, so we might be looking at, say, $3,300 gold. At a minimum, we're probably looking at $3,100 gold. Perhaps it, keeps going all the way to $3,500 gold. So yeah, things are still looking good. You can see that gold is basically occupying these purple bands. This is very like classic bullish action. You'll see the purple bands forming at the top. And the purple bands are kind of like an acceleration metric for standard deviation. I won't get into the math of how that is done, but it's very useful. I've seen it just work over and over again. And I kind of had to create it because stock markets were too parabolic. They were too exponential for the blue bands to be sufficient to describe their price action. So anyways, yeah, gold just continues to look like it wants to perform. That's great. I think a lot of people here have gold. So yeah. I'm going to keep holding on to my gold. And oh, by the way, if you've got physical, even as this thing starts to top out, it's like physical takes a lot of friction to get in and out of, right? You're going to spend at least 3% on the in and out, right? On the spread of purchase and sell. So generally speaking, like even if we had a macro crash and I thought gold was crashing, I'm still not selling my physical because the friction there is just too costly. And you might as well just hang on to it. So at some point here, and I'll let you guys know, it probably would be wise to either flip your gold into some like cryptocurrency or probably, into something solid like land, right? If you have an allocation towards gold, it's because you're trying to keep something solid, real physical in your hands. So maybe you want to buy some land or some property or something with that gold or a house or whatever. That would seem to me to be more like congruent, but everyone has to make their own decisions. Reverse repos have not gone back towards the upside, but they haven't gone towards the downside. So this hasn't given us a confirmation signal one way or the other. Again, what are we looking for on the macro crash? Imminent macro crash. We're looking for this shit to start going up again like that. We haven't seen the kind of uptrend, peak pullback, but not all the way fall back down. So peak pullback and then resume the uptrend. We haven't seen that for like 3 years or 2 years in the reverse repos. It's just been down from 2.5 trillion. So again, yeah, that would be a sign. What is this fundamentally speaking? It's a sign of institutions moving out of risk and into protection of the Federal Reserve overnight. So it's not a bond, but it acts a lot like bonds. It acts like an overnight bond, basically. Oops, I did not mean to show you all that code. Let's see, anything else here on this chart? No, I don't think anything here. Pesos winning against the dollar right now. So that's, I guess, good for those of you that have pesos, probably all like 5 of you. Okay, let's go to Bitcoin now. So now that we've got the macro in our heads, we kind of understand what we're looking at. The charts are kind of starting to break down already. Again, you would look at this. We talked about this a few weeks ago. We said, yeah, everyone's kind of crying and panic in the streets. Actually, the whole crypto space has been fairly mature about this pullback. To be honest, I haven't seen too much crying, which is surprising because usually there's a lot of belly aching when you have pullbacks. But yeah, it's not too surprising in a TA sense to have set a solid new all-time high at $110,000 ish. And then, hey, we kind of just busted through that. Maybe it would be good to touch this and establish the previous all-time high at about 70,000 as support. Currently, this is enough wick action down here to say that you've done that. But here's the problem. I really do think this macro crash is like very, very near on the horizon here. Not even on the horizon, right? Like it's coming. It seems like it's more and more likely that it's coming. Oh crap! I forgot one major piece of this macro picture puzzle, the fundamental piece of it. Tariffs. So it's hard to talk about this macro crash without tariffs. Now, when it comes to these macro crashes, when it comes to the deflationary scare, it is almost always, in fact, it's always the case that some massive amount of leverage has happened, right? All the money printing and you're taking out loans to buy more stocks, and then the derivatives bros are like going 20x long, 10 to 20x long, which for traditional finance is ridiculously irresponsible. For crypto, you're kind of used to it, but anyways, they're taking all these longs and like everything is just inflating, bubble. It's been an AI craze lately, and then you sort of reach this maximum point. It's like, okay, you've basically maxed out the system for as much as it can really provide you. And then people start getting risk averse, and then things start pulling back into the reverse side a little bit. And then it just takes like some moderately fundamental event to pop that bubble, right? To pinprick that bubble. So when that happens, it's like this thing gets blamed like, oh, the poor people were taking loans on houses and they nearly destroyed the global economy. No, it was the derivatives bomb. And that was just like, people were smoking amidst a whole bunch of fireworks, and, someone's ash fell on a fuse, right? Like, it wasn't the poor people. And I'm not saying that all poor people smoke either. What I'm saying is that, when you look at these fundamental events, you have to realize that's just the thing that popped the bubble. Something was going to do it. And right now we're looking at the tariffs, and the tariffs are probably going to be the thing that pops the bubble. Because did they actually remove income taxes? No, they didn't do shit. But they put tariffs on, and Trump has been implementing tariffs for the last few weeks. He's been waffling a lot, like, well, we're going to do this tariff. Well, no, now we're not going to do that tariff. Oh, it's going to be fantastic. It might even be amazing. Right. So like he's been like threatening all these tariffs and going back and forth. So I did some research and found out, like, yes, certain tariffs have actually been implemented in the past few weeks, and it is now affecting that global trade and the economy. And so when you start layering tariffs in such an interlocked global economy and tariff wars, right? Because, for example, you might like have some aluminum that gets mined in Kentucky, and then maybe that gets shipped to Canada to get made into like piston heads, and then it gets shipped to Mexico to be made into an engine. And then it gets shipped, I don't know, back to the United States to produce a car, which is like not what happens, but just, follow me here as a hypothetical. But that's something like that happens when it comes to like car manufacture and raw materials and stuff like that, right? The raw materials come from one place, they go to another place to get refined, and then they get put into parts, and then those parts get assembled into something, and that something gets assembled into a full complete thing, and then that gets shipped to the place it's actually going. And every time that you cross the border, you're paying tariffs. What do you think that's going to do to consumption, to the economy? Like, and like the simplest sense, guys, what happens when they raise taxes on stuff? Do you buy more of that stuff, or do you end up saying, oh, maybe I don't need, the Frank's 2000-inch TV. Maybe I just need Frank's 500-inch TV, right? Maybe that'll be good enough. And so the economy starts slowing. And if the economy is slowing into a leverage system that's already maxed out, what's going to happen? Yeah, you guessed it. The entire system is going to have a big macro deflationary crash scare, and then some kind of intervention is going to have to be made. So my thinking on the matter right now is that the tariffs are probably the thing that's going to pop this bubble. Trump has even spent time saying it's going to be difficult. We're going to have to, tighten our belts, or whatever the hell he talks about and says. But he's mentioned that, hey, it's not going to be easy. It's going to be difficult. Okay, sorry to wander around so much here, but those fundamental events are important. And I know that I don't have flashy graphics for you, so hopefully my storytelling has been good enough there to illustrate what's going on. Back to Bitcoin. Now that we have like the lay of the land, you have like some kind of idea of what's happening in the macro, we can go back and look at the charts, and you can sort of interpret, our tea leaves, astrology, my astrology, and you can decide for yourself. So Bitcoin is pulling back here. In a technical sense, you would say, hey, it's actually not a bad idea to touch 70K, but with the macro situation the way it is, it definitely won't stop at 70K if we start getting a macro crash. So just keep that in mind. In terms of like wave magic, you might say, okay, we've hit these moving averages here, touching that 73,000 level in tandem with these moving average cluster right there. That's kind of like a spot you would take a sort of a swing long. You might get long with some leverage there. In this broader situation of the potential for macro crash looming against us, I would 100% say if you take a long there on leverage, take your profits, take them early, and get the fuck out, because the market could reverse on you, or at least just make sure you're watching it very, very carefully. Because that's kind of, we're in a dangerous spot right here for longs. Maybe I'm wrong, and maybe they just patch over everything, and maybe everything's just ready to go for another massive high. I suppose that could happen. Anything can happen, but personally, that's too much risk for me. I won't be taking. I am looking I'm looking for opportunities to short this market when I see that signals actually confirming that, yeah, this shit's incipient. This shit is crashing or about to crash within a week. Then I'll be going short. I'll be trying to protect my stack. Maybe I'll be dropping some shitcoins. I might be dropping shitcoins anyways. If we get a little bit of rebound in the market going into next week, there's a good chance that I'll probably drop some positions, or maybe not. Maybe I could just take shorts and protect that stack. Because, the other thing that I think with a macro crash, is it possible? Could Tether go tits up? I don't know, right? Could USDC, have some kind of major failing? I don't know. Could the banks have some kind of major failing? Maybe a few banks, right? And who knows? So maybe it's not great to flip your crypto into Tether, right? Maybe it's just better to hold, even if it was something like, and I hate to be, putting anything out there, but Ethereum, right? Number 2 coin, or even Link, right? Because Link is interesting because it doesn't have a chain. It's just like exists on everyone else's chain. And it sort of like ties oracles into the system, right? At least there's a fundamental narrative of possible value there. And a token that exists on a bunch of chains in the sense of, with some level of permissionship or censorship resistance. Whereas at least like ETH does have some level of censorship resistance. Whereas like Tether has none. Like it could just go belly up, and then what are you going to do when your Tether's, you're getting 50 cents on the dollar? Anyway, so there's probably a case to be made for taking a short, keeping your crypto while taking a short, so that just in case, things actually really catastrophically collapse, you're not just sitting there holding a bag of Tether USDC that's worthless. I think that's a very low probability thing to happen, but it's not a zero risk, right? It's not zero risk. So, okay, yeah. So Bitcoin having some troubled times here from the top, in a TA sense. In a TA sense, this actually isn't the greatest chart, guys. If you're in a bullish environment, this right here, those blue bands, those upper standard deviation band clusters, that should have been a stopping point, and Bitcoin should have come back to the top side, especially in light of the fact that the strategic reserves are happening, right? It was announced, and then what happened? Just shit crashed. Like after the announcement, we could get a single candle to the top side. This guy right here, this candle. That was the announcement, and then it came right back down. Like that tells you something is fundamentally not good here. Like something is going on that's not what should happen right there. With the fundamentals, that's not what should happen. With the TA, that's not what should happen. This should have been the stopping point, and it should be up here, both in a TA sense and a fundamental sense. That's not what happened. So that tells you something is awry. So again, I'm just trying to, I don't know, just trying to give you some perspective there, or at least my perspective. Bitcoin is doing pretty good though on the dominance, right? So it's kind of hanging out at these upper standard deviation bands. It has made a massive move to the 60% area. This should be fairly capping I won't believe anything that gets up here. Any spike to the upside here is an opportunity to flip your Bitcoin into altcoins because it's not real. Just know that, like the spike up to the top is your opportunity to get into altcoins cheap. And especially if there's a macro crash, that kind of spike could totally happen. And because again, everybody knows that the liquidity expansion, you're going to see the shitcoins just pop off. So it'll be a quick spike and it'll probably come back down. Or maybe if it doesn't quickly come back down, it will come back down. So anyways, buy altcoin, sell Bitcoin, buy altcoins if you see a spike above those levels to say 70% Bitcoin dominance. That is your opportunity, golden opportunity. Okay. Let's see here. No, I don't need to talk about that. Last thing, we'll take a look here. Probably last thing. GDP, like we talked about last week. I just want to show for anyone that didn't see the show last week. The quarterly GDP was minus 2.4%. Like, you tell me if that's a problem, right? And it's not looking good for this quarter either, right? You've got unemployment that looks like it wasn't so great for February. So unemployment, our next numbers on the unemployment are probably going to spike some more. Now that I'm looking at that a little bit more. So yeah, February didn't have the greatest unemployment outlook, but the official numbers are not in, but those numbers will probably be another spike, which is negative for the notion of not having a macro crash. That's two negatives, which makes a positive, which means probably are going to have a macro crash. Anyways, so yeah, minus 2.4% on the GDP is, we haven't seen, the only last time we've seen a negative number was in 2022, April of 2022. And I don't remember if you guys remember, or I don't know if you guys remember what was happening back then, but that was like the beginning of a bear market that everyone was, But so yeah, things are like bad here. Like in terms of the economic macro numbers, like shit's not looking great. So did we get any new housing numbers? Let's pull this up really quick. Housing is supposed to have bottomed. No, we haven't had any new housing numbers. Okay, so we'll have to wait and see on that one. Yeah, so with that, that's all we got here, guys. Just again, make sure you're watching. Give a midweek look. I'll try and post on Twitter about it just to let you know, like, hey, no change, or like, hey, things are breaking down, etc. I'll try and like give you a tweet here or there in the middle of the week to let you know how I'm seeing things. But hopefully, again, if you're watching this price report on a regular basis, you should be able to know the things that I'm looking at, right? So you should be able to pull up your own charts and say, okay, we're going to track oil, we're going to watch we're going to watch the reverse repos, we're going to watch bonds. Those are like your macro signals that tell you when shit's about to go down. Oh, here's another indication. These are credit spreads. So this is the difference between the yield that you get with a corporation and the yield that you get with the government. So when those spreads go to very, very low, it means that everyone is very comfortable, that the corporate environment is looking cheerful, and that people are not, corporations are not going to go bankrupt. But when things start getting dicey, that's when people start demanding higher interest rates on their corporate debt. In other words, I will not take your bond, Mr. Corporation. I'm not buying your bond unless you give me a higher rate. And so what you see is the spread between corporate rates and government rates start to spike, and that's what's starting to happen. And these often precede significant. Either they're synonymous with, and occasionally they precede a big macro event. And again, the mechanism is obvious, right? You want more interest rate from that corporation if you're going to buy their bond. And when you're going into a macro crash, like, things are anything but certain. So right now we're seeing some spike there. It's actually a pretty significant spike. It's not necessarily the biggest, but it is still a spike, and it is, again, another little small contributing point to this picture, right? This understanding the fabric of our macro reality, that in fact there are problems, and that it is probably getting closer, right? It's no longer okay. It's going to come. The things are still moving, but be patient, right? It's not like, no, pay attention now. Okay, so yep, I'm probably gonna keep hammering that until we actually get this macro crash, unless things just miraculously turn around. I don't expect that they are going to miraculously turn around. Although this probably is a good spot to wait, to watch for the S&P here. Like, there's probably some bounce in store. Like, probably this thing might come up here next week or whatever. That would be a good opportunity to get the hell out. Especially if you see the S&P pumping. If you see risk assets pumping into the macro deteriorating, that's actually just golden opportunity for you. So keep an eye on that. It doesn't always end up being perfect, right? It doesn't always end up where the big signs are deteriorating while the risk is pumping. So you're like, aha, I know what's happening. And then you can sell your bags while everyone else is thinking that it was just a dip. But sometimes it does happen that way. So be prepared in case it does. You can make a lot of money doing that. All right, let's take a look really quick at the comments here. I just want to make sure that, oh shit, we got 3 of them here. Sorry, guys. I don't know, Tux, if you want to put these comments up one by one, we can read them off. I've missed them all. All right, we have Nihilist tipped $1.24. Bowdy telling people to buy land sounds like saying touch some grass. Yeah, I guess indirectly. I just told everyone to touch grass. If only we had more grass here in my city that I live in Mexico. We have some grass. XMR HK tipped 25 cents. He says, "Love you guys. Keep up the good work. Monero all the way." Thanks, HK. Love you too. And then Hiroshi tipped 25 cents. "Thanks, Doug plus team, for your consistency with this show. Monero Talk is the best podcast in crypto." Thank you, brother or sister. Yeah, Doug, especially Doug, just has put this whole thing together and just makes it happen every week. It's pretty crazy. I definitely wouldn't be here telling you guys about price if it wasn't for Doug putting the show together. So thanks for the 25 cents.
All right.
Yeah, I think that's all I got for you guys here today. A lot
Thanks,
of
buddy.
doom. Woe is me.
Guess the macro crash didn't quite happen as you were suggested. Maybe hoping, but
Well, what I was hoping for was that we get, my ideal scenario was that we get some kind of midweek pump followed by closing back at the lows, and that would be like a confirmation point. It could still after that take another week or two, but I was kind of hoping for more clear resolution by today. That okay, no, the signs are clear now. It's going down. Just get ready. So, but at this point, it's still okay, it doesn't have to happen next week. It could still be 2 to 3 weeks away, but it's the direction is still clearly moving in, right? We're moving in that direction. And the end of March, beginning of April, after the November timeline or the December timeline didn't work out, is no, that's not going to happen. My next most likely point has, like I've said before, has been end of March, beginning of April as our most likely timeline. So yeah, we'll see. We'll see. It's I'm obviously trying to predict the future, and what the fuck do I know? I'm just some dude with tea leaves and astrology.
yeah. Yeah, I noticed they everything kind of closed a little bit higher on Friday. So it's okay, we're probably not fully on. But next week will be interesting. because for one, the CR was passed in the Senate, so the government's not shutting down. So that could be a factor. So unsurprisingly, right? And then second, next week there's going to be a FOMC meeting.
A what meeting?
A FOMC,
Oh,
a Federal
FOMC.
Open Market
Oh, shit, yeah, I
Committee
forgot about that.
meeting.
Yeah, the FOMC.
Next
Yeah.
week. So we'll see what happens with that.
I think the bet is they're not going to raise rates. I think if they lowered rates right now, that would look like weakness. The market, I believe, if they lowered rates, the market would take that as weakness. They'd say, "Oh shit, even the Fed knows something is wrong. That's why they're lowering rates already."
Yeah, because it doesn't. I don't think it makes sense to lower rates right now.
It kind of does. I think it 100% does, but it just communicates. It communicates fear if they do. Is the only problem. Yeah, you made a good point about the resolution. They passed the resolution, so that is liquidity that could make it into the market. At the same time, like that's liquidity that has already kind of been making it into the market. Like they're just continuing the government spending. They haven't bumped it up by any significant degree, so that might end up being neutral.
Yeah, I guess we'll see how that plays out.
Yeah. All right. I think that's
Good
all
stuff,
I got.
man. Thank you, Body. Thank you so much, man.
Thank you, sirs.